Well, after a period of a real stalemate, we've seen, that big shift in sentiment through the overnight session. So we've got persistent worries about banks, persistent worries about recession, and we did see U.S. indices down on the week last week as well. Let's get some analysis. Harry Watt from Shaw and Partners and Market Matters joins us now. Harry, welcome. We've got U.S. earnings and the tech earnings, which I've been told will go a long way to determine the direction of this market. Looking pretty good. But then you've got all of these concerns on the other hand coming from the banks. How are you reading the overarching sentiment scenario?
Good morning, Nadine. Yes, the US banking reporting season has been pretty weak. You mentioned First Republic there. UBS was also a miss overnight as well. So, on the financial side, that's been really weak. It's sort of what the market was anticipating. Maybe First Republic was a little bit weaker than expected there, given those move in the share price overnight. But we've had that, sort of issues with the banking system come through in the first quarter. We know that the regulators are out there being supportive of the banks. They know that they're going to probably have to inject a little bit of capital, particularly into the smaller banks at the moment. So we do expect this one to sort of move through and pass through and be okay. Probably the worry for the banks moving forward is how deposits go from there and how home loans and mortgages look over that medium term. So we're having a look at the data. We're sort of starting to see these leading indicators roll off and some concern around economic growth come through, and that will play into how debts and things arise. But for now, we are seeing some support from the regulator, which will be key to holding this market up. You made mention of the tech reports overnight. Microsoft was really solid report there. Spotify was a really solid report there as well. We've seen a bit of money flow into that tech space in the last 6 months as well. So market was really sort of positioned for that for these prints to come in ahead of expectations. So it wasn't a massive surprise. We haven't seen a lot of moves to the upside despite these beats today, Nadine. But overall, reporting season itself has been pretty solid. I think market was getting a bit ahead of itself on these issues on the economic front. Short term, and maybe we see that play out in the back end of the year. But at the moment, market's being held up pretty well on the back of pretty solid reports from the US reporting season so far, Nadine.
Okay. So we will continue to keep an eye trained on US reporting season, of course, the quarterlies. But if I can just cast your mind back to Monday, I had the pleasure of speaking to James Garish, who is your colleague there at Shaw and Partners and Market Matters. And just after that South32 production report was released, his initial reaction was that it was a bit of a knee-jerk coming from shareholders to that production report coming in. Now that the dust has settled, Harry, what is your assessment of that production report, and of course what it means for South32 going forward?
We saw South32 come off pretty heavily on Monday. In the end, it was down about 7% there. It did rally back from around $4 to around about $4.20 by the end of the session. So overall, pretty soft print from South32. Downgrades to met coal and alumina. The key headlines there. Broadly speaking, the rest was okay. There's a little bit of cost inflation coming through for South32, but I think what the issue was market was really well positioned in South32. They were quite bullish that stock heading into those numbers, so they did need to sort of meet expectations to even hold its ground. I think meet there might have seen the stock off a little bit, so we've seen it pull back a little bit. It's probably going to be in the naughty corner for now anyways, Nadine. So it's going to be pretty hard to trade this one for the moment, given that they've had these issues come through. They've missed market expectations. They're going to need another catalyst to see this stock higher. We've also seen resources probably come off a little bit now. Expectations for resources moving forward, base metals in particular, probably a little bit more dampened at the moment as well. So maybe a bit of a headwind coming through for South32 in the naughty quarter on its own numbers as well. So probably one that we're staying out of for now, Nadine.
Okay, interesting. So an avoid for South32, even though I know you guys are pretty positive on other key commodities and companies within that space. So when you think about where we're at, I mentioned that coming into this week, coming into these tech results, they were largely thought to direction the course, to really set the US markets potentially on a direction. Where do you sort of see us here in Australia, as we continue to bump around these levels?
Yeah, we're right up near all-time highs. We've been really solid the last few weeks. A bit of a trade coming in here that the market's really not been positioned for. The path of least resistance continues to be higher. Markets really underweight equities. Globally, it's not just an Australian phenomenon. It's in the US, in European markets. This path of most pain is still on the upside. So it's hard to really see a deep pullback, a meaningful pullback out of this, unless we really see economic indicators really roll off. And that's what our main concern is. So we are starting to see, like I said, leading indicators suggesting a bit of a weaker economic outlook coming through. So that will probably play into how markets react. We're seeing a little bit of pullback on equity markets today on the back of that, on the back of banks reporting over in the US as well, and resources rolling off. So at the moment, though, I think the issue is we're priced for perfection rather, despite being a little bit underweight equities from the investment standpoint. So it's really hard to see how we see meaningful moves either way at the moment. Really hard to really make a really bullish bet on the market here, given we are trading around those all-time highs for the moment. I think banks probably have a bit of a headwind coming through. We've seen that First Republic report play into it. And locally, we're probably seeing bad debts start to come through as well. The Bank of Queensland report was pretty weak, and that's really weighed on the regionals as well. So overall, I can't see this market really ripping up and seeing new all-time highs near term. But at the same time, I do see a bit of support into pullbacks because there is plenty of cash on the sidelines for equities. I guess probably the main thing playing into that will be how interest rates go and how inflation plays into that. Like you mentioned, we've got the inflation print today. So if that continues to be higher than expected, we're going to see more interest rate rises priced in. We're going to see that back end of that yield curve have to lift as well. And that will probably put some pressure on equities near term. But overall, there is some support out there. There's plenty of cash on the sidelines to buy these dips. And that's probably what we're going to be looking at doing, Nadine, as well.